Hi everyone, this is Brian Neal with TradeToBeFree.com. I just want to give everybody an update and also show you a couple more examples of the strategy that we use on top stocks. Today I want to look at the August 12th weekly alert where we had both a long and a short trading setup. So we've got the bear signal in the overall market that we saw in early August, and very often you get a secondary wave lower in a more volatile market. So it's a good opportunity to look for good both long and short opportunities. Okay, and I want to show you the first one here, which is a long on ENPH. Now ENPH had one of the biggest earnings beats this quarter, and they raised guidance for sales in the next quarter by like 40%, I believe. The entry point was a move above the high here in this flag, this earnings flag. Okay, and you can see down below the chart we've got the commentary and what we like about the stock, and also the entry point, which in this case, which was a move above 32.85. Okay, and we have our target sell price here and our stop loss. So in this case, what you would do is just wait for the price to move above that point. You could do that with a buy stop order, or you could just wait for the price to reach that point so you can set up an alert with your online broker. And we've got a video on the site on how to do that with Thinkorswim. But if it moves above 32.85 or hits that point, you can have your broker alert you, and then you can take action from there. And we can see already it's gone up, about 5% or so. And we'll just take a quick look at a short-term chart here and just see how far it's went. Looks like it's gone up about $2, so it's about 6 or 7%, about 6% or so from the entry point, technical entry point, to the high. Okay. So in that 4 to 10% range, we like to take some off and then stop near entry point. So lift that stop a little bit and then take some off at that first target. And if you're really bullish on the stock and if you want to go for the larger target, you can just raise your stop a little bit, or you can just let the trade play out as is and see if it hits the profit target before hitting the stop loss point, or whatever stop loss point you choose. If you wanted to give it more room, you could drop a stop below the consolidation area here in this earnings flag, so just below here if you want to give it more room. Okay, and the other top setup for the week was flow, and flow is a short. You can see down here in the commentary we go over the entry point, and with all of our trades, or most of our trades, there's a trigger. Okay, we want to see the price starting to move in our direction again. All right, typically what we're looking for is a long-term uptrend, a narrow consolidation, followed by a confirmation that the long-term trend is continuing and starting again. So it's sort of a pause within a long-term uptrend. Very oftentimes it's actually a breaking of a short-term downtrend within the overall uptrend. Okay, I'll give you a good example of that here in EHTH. EHTH was eHealth, featured back in May in this symmetrical triangle pattern. Okay, but it had the downtrend resistance here where this channel line was being tested multiple times. We can see that was tested 3 times, and that confirms that downtrend resistance. And then what you do is you click the chart every day on the site to see when that price closes above the short-term downtrend resistance. And then once that occurs, you go ahead and put a market order in to buy at the open the next day. That's the strategy. And then you have your stop loss, and you also have your target that you go for. Okay. In some cases, we're looking at a break of that downtrend resistance. Okay. And other times we're looking for just a move into usually new highs, or a move above a horizontal resistance. Now, flow is a short, and a short sale, for those who are unfamiliar with that, is just basically you're borrowing shares from your broker, and you're selling those shares in the open market, and you're buying those shares back and then paying back the shares to your broker. So you're making money. Basically, you're making money as the stock moves lower. All right, and the way you do that is you see if your broker has shares available to short. If they do, you're borrowing those shares, selling them, hoping to buy them at a lower price. And what happens is that you make the difference between what you sold the shares for and what you bought the shares back for. Okay, so your broker is lending you the shares, but you have to pay back those shares. Okay, and so if the trade goes against you, you're going to have to cover or be forced to cover. If you go below a certain threshold in your account, your broker will give you a margin call and close up the trade so they get the shares back. Okay, because basically what you're doing is you're borrowing those shares from another customer that the broker has. Okay, allowing you to sell those and then buy them back to pay back the broker the shares. All right, so that's sort of the mechanics of how it works, but basically it's just the same thing in reverse. Okay, a long trade, with a long trade, you take the price that you buy it at and the price you sell it at, and that percentage move is the percentage you make on the money that you put into the stock. And the same thing goes for a short. The price at which you sell the stock at and the price that you buy the stock back at, that difference as a percentage is what you make on the short. Okay, this one had a entry point of a move below 35.50, so we're looking for confirmation of this break of this uptrending channel here. And we can see that the day after we featured the stock, it actually moved below there, opened below there, so you could have shorted between, say, 35 and 35.50, somewhere in there. And then the stock moved to around our first target. We said the target was around 32.50. It's already hit that area a couple times. Okay, and it's still around that area, and still looks good here too. It still looks like it's forming a bearish flag down here, and it may break to the downside. And go lower and hit that final target as well. So, but again, that 4 to 10%, that first wave toward the target is a good place to take some off and stop around your entry point, or a little below even, and that's one way to play these. So with our strategies, you can play either the long-term swing trade, okay, or the short-term swing trade. So whether you're looking for, say, a 4 to 10% profit within a few days to a week or two, let's say, or whether you're looking for a 15, 20, 25% profit or more within a few weeks or so, you can play it either way. Okay. One thing you can do too is take some off in that 4 to 10% range, and then go for the final target with the rest of your shares, or some other target that you think the stock can reach. So it's been a really good month so far. We had Roku, that was a big winner. That reached our entry point. We actually had a YouTube video on YouTube just before it broke out, and we featured it in the weekly alert a few days prior, and that gave you plenty of time to prepare for the breakout if and when it occurred. And we got the great report on Roku, and it took off, and it ran another 20% from the breakout point, and it was a real nice trade. Trade Desk, we came out the Thursday night when they reported earnings as well, and the daily alert, and we talked about the fact we didn't like the earnings report so much. It was gapping lower, and being a Friday, the day after, so we didn't like that trade as much, and we backed away and we didn't trade that ourselves. But if you would have traded it anyways, despite the underwhelming earnings report versus Roku, the stop, I believe, on this was, the stop was about a 4.5% stop on that. And so we knew that would either go or not when we see that break in new highs like that with a catalyst. Usually a fairly tight stop loss is the best way to approach it. And, again, we didn't play it ourselves, but if you would have, you could have just put that tight 4.5% stop loss in there right after entering the trade, and that would have stopped you out. So, meanwhile, Roku took off, and, like I said, went up, 20%, I think, about 20% from the open price the day after the big beat. And it's also forming a nice earnings flag here, and could break out of that in the days ahead. Although that's a little more risky, and I'm not seeing any new information right now that came out recently that would force that into new highs or carry that further into new highs. But it's definitely a good formation, nice narrow consolidation, and I would be looking for something new, either in the near term or something that just came out that would increase the value of the company And if it does, then I would probably jump in on that. That's a nice earnings flag. Okay, hope that explains the strategy in more detail, guys. We have all the top trading opportunities that we featured to clients over the past few years on the site. So when you take that free trial, you see all those trades, and you can just click the chart on the site. I can show you that again. Just go into each alert, and then from there, just click on the chart, and the latest chart will come up in Stocktwits.com and show you exactly how the stock has performed over time. And then you can just adjust down here how many years you want to go back, and you can see how well the stock has done since then. All right, that's about it for now, guys. Thanks for listening, and we'll talk to you again next week.